Hey everybody, Chuck Jackson here with Florida Realty Investments, and well, it's official. Summer is here and it's the middle of the year. Time to take a look at where the real estate market is likely headed for the rest of 2022. So let's get started. The last 2 years caught many of us off guard. And it's not just because of the pandemic. They also ushered in the hottest housing market on record, with home prices rising nationally by nearly 19% in 2021, driven primarily by low mortgage rates and a major supply shortage. But while some had hoped 2022 would bring a return to normalcy, the U.S. real estate market continues to boom, despite rising interest rates and decreasing affordability. So what's driving this persistent demand? And is there an end in sight? In this video, I'm going to cover 3 factors impacting the real estate market right now. Find out how they could affect you if you're a current homeowner or plan to buy or sell a house this year. Over the past couple of years, home buyers have faced intense competition for new houses, in part due to historically low mortgage rates that were a result of the Federal Reserve's effort to keep the economy afloat during the COVID-19 pandemic. However, in response to rising inflation concerns, the Fed is now reversing those efforts by raising the federal funds rate. And as a result, mortgage rates are rising as well. Few experts predicted, though, that mortgage rates would go up as quickly as they have. Just this past January, the Mortgage Brokers Association projected that rates would reach 4% by the end of this year. By mid-April, however, the average 30-year mortgage rate had already hit 5%, up from around 3% just a year ago. On a $400,000 mortgage, a 2% difference could translate into an additional $461 per monthly payment. Since then, mortgage rates have continued on an upward trend. So what impacts are these rising rates having on demand? While many buyers have hoped for a cooling effect, experts warn that that may not be the case. Al Wolf, chief economist at the housing market research firm Zanda, told Fortune magazine rising mortgage rates are having a counterintuitive effect on the housing market. Home shoppers have actually sprung into action in an attempt to buy homes before mortgage rates rise any higher. Since inventory remains low, the resulting race has kept the home buying market highly competitive, at least for now. So, what does it mean for you? While current 30-year fixed mortgage rates represent an increase over previous months, they remain well below historical averages of 8%. As inflation across the economy continues, the Fed is likely to raise rates further this year. If you're looking to remortgage or buy a home soon, you should consider acting fast to secure a good mortgage rate. This applies to sellers also. The pool of potential buyers may have shrunk as mortgages become more expensive. And if you plan to finance your next home, you'll want to act quickly to secure a favorable rate for yourself. History shows higher interest rates don't necessarily translate to lower house prices. In fact, home prices rose 5% between 1980 and 1982, a period of significantly higher mortgage rates and inflation. Forecasters expect that home prices will continue to go up throughout 2022, although likely at a slower pace than the over 18% increase of the last 12 months. Bank of America predicts that prices will be up approximately 10% by the end of this year, while Fannie Mae expects 11.2%. In addition to the limited supply and a race to beat raising mortgage rates, home values are also climbing because of positive economic indicators, like low employment. Plus, rents are soaring, up 17% from a year ago, which is prompting more first-time home buyers to enter the market. Add to that the continued popularity of remote work, and it's easy to see why property prices continue to surge. However, it's not all bad news for prospective home buyers. Economists expect that as mortgage rates rise, the rate of appreciation will continue to taper, though this effect may be gradual. So, what can you expect? While the pace of appreciation is likely to decrease next year, home prices show no signs of going down. However, current labor shortages are leading to higher salaries and better job opportunities for many workers. You may find yourself that your income growth outpaces your home prices, making home ownership more affordable for you in the future. For homeowners, the outlook is even brighter. You could find yourself sitting on a nice pile of equity. If you want to keep up with how quickly your home is increasing in value, visit our website at jacksonfloridaproperties.com and sign up for our free monthly home value report to be emailed to you every single month. As noted, one of the largest hurdles in home ownership is the lack of inventory. According to February 2022 report by Realtor.com, there's an expanding gap between household formation and home construction, which has resulted in a nationwide shortage of 5.8 million housing units. The origins of this shortage date back to the 2008 housing crisis, during which crashing home values led contractors to stop building new properties, and that trend has really never fully reversed. That decline in home construction also resulted in a decrease in the number of home building professionals, a trend that was exacerbated by job losses during the COVID-19 pandemic. Now, many builders are limited by their ability to find qualified labor. Another major challenge is a staggering increase in the cost of materials. Pandemic-related supply chain shortages have become a significant driver, with home building material costs rising on an average of 20% on a year-over-year basis. The price of framing lumber alone has tripled since August of 2021. These trends add up to tens of thousands of dollars to the cost of a typical home. Factors like a lack of buildable land in many areas, restrictive zoning, and a shortage of developers also contribute to the issue. Most home buying experts agree that the lack of inventory is the primary driving force to rising house prices and unprecedented competition for homes. With available home units near 4-decade lows, the end of the current housing boom is not yet in sight. So, what's the outlook? Prospective buyers should be prepared to compete for houses, since low inventory can lead to multiple offers. You may also need to expand your search parameters. If you're ready to look, we're ready to help. For sellers, the picture is rosier. In this strong market, your home may be worth more than you realize. How much more? Give me a call and I'll send you a comparative analysis of recent home sales in your area along with an estimated value of your home. While the national real estate trends, as we discussed in this video, can provide a big picture outlook, real estate is local. That's why every month, typically the second week, I publish an Orlando real estate update video which covers the previous month's sales and marketing data, along with a summary of where the Orlando market is trending. This month's local real estate update should be posted in about a week. I have provided a link in this video description to my YouTube channel so you can find it easily. Be sure to check it out. And if you're considering buying or selling a home, contact me now to schedule a free consultation. I can help you assess your options and make the most of this unique real estate landscape. Well, thanks for watching, and if you enjoyed this video, help us get it in front of more people by liking it, sharing it, and subscribing to my channel. I publish videos covering a wide variety of real estate topics throughout the month, and you don't want to miss out. Until next time, be safe and have a great week.